What if the real center of black wealth in 2026 isn't New York, Lagos, or London, but Dubai? 8 black dynasties with their combined fortunes touching the tens of billions. Their stories include a boxer who bought 62 apartment buildings at once, a man building the largest refinery on the continent, and a family feud so public and so expensive it's reshaping an entire industry. Let's count them down. And trust me, you're not ready for what's in this desert. Number 8. Floyd Mayweather's family. The money. Brand turns Dubai into a business strategy. Most people still think of Floyd Mayweather as a boxer. And technically, it's true. He's undefeated, 50-0 record, and the highest-paid combat sports athlete in history with career earnings reportedly north of $1.2 billion. But the more interesting version of the Mayweather story in 2026 is what he's been doing since the gloves came off, and a significant portion of that story runs directly through Dubai. Mayweather's current net worth sits between $450 million and $500 million, and his global real estate portfolio is estimated at approximately $780 million, meaning his property holdings are actually worth more than his liquid wealth, which is exactly the capital structure that serious generational money is supposed to look like. The headline deal was his late 2024 acquisition of 62 apartment buildings in Manhattan for $402 million in a single transaction. No partners. One buyer. $402 million. The scale of that move forced a lot of people who had been writing off his financial credibility to quietly recalibrate. His Dubai operation runs on 2 engines. First, the exhibition fight circuit. High-profile bouts against opponents like Logan Paul and Deji that function more as branded entertainment events than competitive boxing matches, generating massive appearance fees while keeping his name at the center of the city's high-visibility event calendar. Second, the real estate and luxury investments those visits facilitate. He owns retail buildings, luxury rental properties, and he arrives in Dubai with a level of organic visibility that most corporations pay hundreds of millions in marketing spend to manufacture. The money persona, the G650 private jet, the 40-plus luxury watches, the convoy of black and white supercars, is not just a lifestyle flex. It's a functioning business model built on the principle that the most powerful marketing tool is a life that people cannot stop looking at. In Dubai, where that philosophy is practically a civic value, he fits in perfectly. Has he faced lawsuits? Yes. Bankruptcy rumors? Those too. But the man who buys $400 million in real estate while the debate about his finances is still ongoing has made the argument against him expensive to sustain. Number 7. The Otedola dynasty. The man who bought 2 Dubai mansions for his daughter's wedding. There are many ways to announce to the world that you have arrived at a certain level of wealth. Femi Otedola, chairman of Geregu Power plc and one of Nigeria's most prominent billionaires, chose a very specific one. In 2025, he purchased 2 luxury houses in Dubai Hills to celebrate the marriage of his daughter, Femi Otedola, to the singer Mr. Easy, one for the traditional Yoruba ceremony, one for the afterparty. Combined value, several million dollars. Duration of use, a weekend. That is the kind of detail that makes people stop scrolling, and it's very deliberately part of how Otedola manages his public image. A blend of conspicuous generosity and unapologetic wealth display that makes him genuinely popular in a way that more reclusive billionaires never achieve. His net worth sits between $1.3 billion and $1.7 billion as of 2026, built on a trajectory that moved from fuel marketing through Fort Oil, where he made his initial fortune, to a strategic pivot toward power generation through Geregu Power plc, where he holds a greater than 70% stake. He also holds major positions in Zenith Bank and FBN Holdings, giving him significant exposure to the Nigerian financial sector. His real estate footprint extends beyond Dubai to London and Monaco, and his published memoir, Making It Big, Lessons from a Life in Business, suggests a man who is very comfortable with his story being told publicly. The offshore structure of his Dubai real estate holdings has drawn investigative attention, with reports describing layered nominee arrangements designed to maintain beneficial ownership privacy, a pattern common among African billionaires navigating the gap between Nigerian regulatory risk and international wealth preservation. Whether that reads as prudent or problematic depends entirely on where you're standing. His daughters, DJ Cuppy and Femi Otedola, are massive social media influencers in their own right, meaning the Otedola brand has generational digital reach that most billionaire families simply don't have. The wedding mansions were just the most extravagant expression of a family that has figured out how to be rich and popular simultaneously, which, it turns out, is a harder combination to achieve than either one alone. Number 6. The Elumelu family. The man who named an economic philosophy after a continent. Tony Elumelu didn't just build a business empire, he built an ideology and then put a name on it. Afrocapitalism is the framework he developed and now actively promotes. The idea that the private sector, not government aid or international charity, is the primary engine of sustainable African development. It's a philosophy with a $100 million check attached to it, in the form of the Tony Elumelu Foundation's Entrepreneurship Program, a 10-year initiative to identify, train, and fund 10,000 young African entrepreneurs across all 54 countries on the continent. His wealth is estimated above $1.5 billion, rooted in Heirs Holdings, his family investment firm with positions in energy, healthcare, and technology, and the United Bank for Africa, where he serves as chairman, and which operates across 20 African countries with more than 30,000 employees globally. His Dubai connection is institutionally significant in a way that goes beyond a wealthy man owning property in the Gulf. In 2022, UBA Group officially launched its branch in the Dubai International Financial Center, becoming the first Pan-African bank to establish a direct presence in the DIFC from the African continent. The branch operates under a Category 4 license, facilitating trade transactions and investment flows between the Middle East, Africa, and South Asia, not as a correspondent banking workaround, but as a full institutional participant in one of the world's most sophisticated financial ecosystems. Elumelu has described Dubai as an ideal ally to help tap Africa's economic potential, and the structural logic is hard to argue with. The DIFC is the financial gateway to a $3 trillion Middle Eastern economy that is actively looking for African investment opportunities, and UBA is the most connected banking institution on the continent. When those two assets are in the same room, the capital flows that result are not accidental. His social media reach is enormous and deliberately deployed. Every post about the foundation, every featured entrepreneur from Nairobi or Dakar or Accra, every Afrocapitalism headline is content that builds the brand of a philosophy as much as a man. In Dubai, where institutional credibility unlocks the best deal flow, that brand is worth more than any single line on a balance sheet. Number 5. The Masiyiwa family. The Zimbabwe-born tech visionary, wiring Africa and the Gulf simultaneously. Here's a question worth sitting with. What does it actually look like when a black billionaire isn't just investing in technology, but building the infrastructure that the technology runs on? Strive Masiyiwa, founder of the Econet Group, has a pretty comprehensive answer. And it involves $720 million, 5 AI data centers, Google, NVIDIA, and a 5G private network deal that puts him at the center of the Gulf's most ambitious digital ambitions. His net worth sits between $2.1 billion and $3.1 billion, and his flagship operating company, Liquid Intelligent Technologies, has become one of the most consequential pieces of digital infrastructure in the Africa-Middle East corridor. In August 2024, he announced the expansion of Liquid services into the Middle East through a partnership with Globalstar, securing exclusive rights to distribute XCOM-RAN private 5G network solutions across the region, targeting luxury real estate developments, high-value mining operations, and the kind of enterprise clients who need connectivity infrastructure built to their exact specifications. The $720 million AI data center plan, developed in partnership with Google and NVIDIA, is the project that most clearly signals where Masiyiwa is positioning himself for the next decade. 5 centers, across Africa, backed by 2 of the most sophisticated technology organizations on the planet. The Emirati tech investment community has been watching it closely because whoever controls the data infrastructure in emerging markets controls the economic architecture that everything else gets built on top of. He sits on the boards of Netflix and the Bill and Melinda Gates Foundation. He co-chairs the B20 Task Force on Finance and Infrastructure. He and his wife Tsitsi have funded over 350,000 scholarships through their Higher Life Foundation and Delta Philanthropies. The scope of his influence runs from the physical cables under African soil to the boardrooms of global tech governance. And Dubai is his Middle East node in a network that is genuinely planetary in ambition. Number 4. The Motsepe family. Mining billionaire, fintech disruptor, and the president of African football. Patrice Motsepe is the kind of figure who makes you reconsider how many different kinds of power one person can accumulate before it starts becoming something else entirely. He's a mining billionaire, the founder of African Rainbow Minerals, built on South Africa's gold and base metals sector, which made him the first Black African to appear on the Forbes billionaire list. He's a fintech investor. Through African Rainbow Capital, he's driving the international expansion of TimeBank, one of Africa's most innovative digital banking platforms, using Dubai as a strategic hub for its push into Asian markets. And he's the president of the Confederation of African Football, which means he sits across the table from Gulf royalty at sports investment summits and carries the legitimacy of representing the entire continent's most popular game in those conversations. His net worth currently sits at approximately $4.3 billion, and the way he operates in Dubai is shaped by all of these identities running simultaneously. TimeBank's Asia expansion needs Middle Eastern institutional capital and the geographic connectivity that the UAE provides. The CAF presidency needs Gulf sports investors who have billions earmarked for football and are actively looking for the right relationships on the African side. And Motsepe is the rare figure who shows up to both conversations with real credibility in both rooms. His philanthropic infrastructure is equally multi-layered. The Motsepe Foundation has committed over $10 million to youth sports and education initiatives, including the KF African Schools Football Championships. He is a Giving Pledge signatory, a commitment to direct at least half his wealth to charitable causes during his lifetime. The soft power dimension of everything he does is almost architecturally deliberate. Every sports investment, every scholarship, every CAF initiative builds the kind of continental goodwill that makes the next business conversation easier to have at every level. What makes Motsepe genuinely interesting as a Dubai player is that his influence doesn't peak in any single domain. It compounds across all of them simultaneously, which is exactly the kind of multi-vector power that the most sophisticated Gulf investment families recognize and respect. Number 3. The Adenuga dynasty, the bull, who quietly owns a piece of everything. Mike Adenuga doesn't do interviews. He doesn't appear at summits. He doesn't maintain a social media presence. He is worth between $6.5 billion and $6.9 billion as of 2026, making him the second wealthiest person in Nigeria. And he has managed to accumulate that fortune while being one of the most genuinely private figures in the global billionaire class. His nickname, the Bull, is not a marketing creation. It's a description of how he operates, relentlessly, directly, and almost entirely out of public view. His first million, made at 26, came from selling lace and distributing soft drinks. One of those biographical details that sounds like it should be a metaphor, but is simply true. Today, his empire runs on two primary pillars: Globacom, one of the largest mobile telecommunications networks in West Africa, and Conoil, which operates in Nigeria's downstream energy marketing sector. Both are cash generative, both are dominant in their respective markets, and both feed into a diversification strategy that has quietly built one of the most significant private real estate portfolios in Dubai. Those Dubai holdings are not publicly enumerated, but they are consistent with a pattern among Nigeria's ultra-wealthy of using Gulf real estate as a hedge against naira volatility and a safe harbor for assets that sit outside the reach of the regulatory and political turbulence that periodically sweeps through Lagos and Abuja. It's wealth preservation architecture, systematic, disciplined, and designed specifically not to attract attention. His daughter, Bella Disu, is now in a senior operational role within the family's assets. A succession structure that mirrors the professionalized family office models used by the most sophisticated dynasties in Europe and the Middle East. The bull is building something designed to outlast him. And given that it's already at $6.9 billion, the foundation it's being built on is not a problem. Here's where it gets really interesting, though. Because while Adenuga operates in near-total silence, our next two entries have made their rivalry so publicly explosive that it has reshaped an entire industry. And both of them are in Dubai at the same time. Number 2. The Rabiu family. 120% wealth growth in 1 year and a billion-dollar rivalry. Let's start with the number, because it genuinely demands to be the first thing said. Abdulsamad Rabiu's net worth increased by 120% in a single year, jumping to approximately $11.2 billion by early 2026. That is not a rounding error or a projected figure. That is a man who added $6.1 billion to his net worth in 12 months, primarily through BUA Cement, whose share price rose 135%, and BUA Foods, both of which delivered record profits while benefiting from a surging Nigerian stock market. Rabiu's BUA Group is the vehicle for this wealth, and its strategy is as direct as it is effective. Identify sectors where a dominant player has become complacent, move in with aggressive pricing and infrastructure investment, and force a recalibration of the entire market. Cement, sugar, flour, real estate. Northern Nigerian educational infrastructure. BUA has disrupted or is actively disrupting all of them. And the primary beneficiary of that disruption, and also its most vocal critic, is the Dangote family, whose market positions BUA has most directly challenged. The public feud between Rabiu and Dangote entered a new phase in late 2023, with both parties exchanging allegations of financial impropriety, market manipulation, and economic sabotage through the Nigerian media. It is, in the most literal sense, a battle of billionaires for the economic soul of West Africa's most populous country. And it is playing out in boardrooms, regulatory offices, and Dubai conference rooms simultaneously. Rabiu's Dubai presence is anchored in logistics and procurement, using the city as the sourcing hub for the industrial machinery and equipment that fuels BUA's physical expansion. He was a prominent figure at the 2025 UAE Africa Business Leaders meeting, where the contrast between his growth trajectory and more established players was impossible to ignore. His philanthropic arm, the Abdul Samad Rabiu Africa Initiative, ASR Africa, focuses on health and education infrastructure in a way that is visible, community-facing, and clearly designed to build the kind of public goodwill that makes regulatory relationships easier to navigate. He is building at speed. He is building with intent. And he is building directly in the shadow of the man at number 1. Number 1. The Dangote dynasty. The $32 billion standard-bearer with the world's largest refinery. The story of Aliko Dangote and his family does not start with Aliko Dangote. It starts with his great-grandfather, Alhassan Dangote, once the wealthiest man in all of West Africa, whose trade networks laid the economic foundation that 3 subsequent generations would build upon. Understanding that the Dangote fortune is not a self-made story in the conventional sense, but a generational compounding story, is the key to understanding why it has reached a scale that now sits between $28.5 billion and $32.5 billion and is still actively growing. The core of the current empire is the Dangote Group, a multi-sector conglomerate operating across cement, sugar, salt, and fertilizer, with Dangote Cement alone spanning 10 African countries and delivering a 69% share price surge on the Nigerian exchange in 2025. But the asset that defines this generation of the dynasty is the $20 billion Dangote Petroleum Refinery, which became fully operational in early 2024. It is the largest refinery in Africa. It is the 7th largest in the world. It was financed, built, and is now operated by a private African family. A fact that sits in the history books next to a very short list of comparable achievements in the history of industrial development on the continent. Dubai enters this story in August 2024, when the family established a formal family office in the city to insulate their wealth from Nigerian naira volatility and accelerate their diversification beyond industrial commodities. The office is managed by Halima Dangote, Aliko's daughter, who is now the primary architect of the family's global investment strategy. The objective is not preservation, it is evolution, moving the Dangote fortune into technology, global equity, and co-investment with Middle Eastern sovereign wealth funds, with a stated goal of building a $100 billion industrial empire by 2030. Their participation in the UAE Africa Business Leaders Summit, where they have pledged over $1 billion for regional infrastructure and power generation projects, signals a family that is not using Dubai merely as a safe harbor, but as a launchpad for the next phase of influence. Aliko Dangote was recognized on the Time 100 philanthropy list for contributions to healthcare and infrastructure across the continent. His dispute with Nigerian regulators over fuel import policies, which he argues directly threaten the viability of his refinery, is an ongoing tension that illustrates how inseparable his personal fortune is from the regulatory architecture of an entire country's economy. The offshore questions exist. The Panama Papers connection, shell companies in the Seychelles managing offshore shareholdings, has been documented and scrutinized. The Rabiu rivalry has been public and unresolved. The complexity of building this much wealth in an environment this volatile is not clean, and the Dangote story does not pretend to be. What it is, unambiguously, is the largest concentration of black wealth in the history of the world, managed, evolved, and now exported to Dubai by a family whose great-grandfather started it all trading goods across West Africa more than a century ago. 3 generations built it. The 4th is taking it global. That is the black dynasty that owns the desert. And that's a wrap on the richest black families that are thriving in Dubai. Which of these dynasties impressed you the most? Let us know in the comments, and for more such interesting peeks into how black wealth is prospering across the globe, take a look at Black Status.